It's Draghi and Yellen. I'd rate them a felon. And it makes sellin' compellin' to protect your dwellin'. And a dollar collapses gellin'. May send gold propellin'. Stick around for more foretellin'.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market gained ground in the last week as beating up retail stocks and oversold low caps, and the Russells got a bounce. That helped the market move up in basically a choppy week. Material stocks also helped as base metals got a big upside boost, and copper just seemingly not wanting to back off at all, and that helped the mining stocks. So there was support during the week from some of the, well, maybe less in focus stocks. Overall, it was a choppy week, as other than a big bulge on Tuesday, the market did not make a lot of ground on a lot of days. Help came from some sense that there was a revival of talk on tax reform. That really didn't last long, however, as President Trump's comments in Phoenix of "give me a wall or I'll shut down the government" pretty much ended that. Nothing seems likely to pass, of course, in this particular environment, as the president seems to be pointing figures at well, everybody, and there just seems to be a huge amount of dissent right now in the government. Investors also waited for Friday, which was the annual Jackson Hole event, where all of the central bankers come together. You know what I feel about central bankers. I got more about that coming in a second. So Yellen gives her speech. Draghi is still to come as I do this recording today, and she said very little about monetary policy. In some ways, that was a disappointment, as the market then had the typical pre-Yellen rally on Friday, and then backed off, and then slowed down and kind of remained choppy. But the dollar got hit, and gold moved to the upside again, and there was, I would say, basically some confusion over the day of what it all meant. And let's take a look at our 60-minute chart, and you could see what happened during this week. So this is the 60-minute chart of the ES, that's the S&P 500, and the gray area is the area of the overnight trading. The white area is the pit trading, as people like me that were pit traders like to refer it. You could see here on Monday, not a lot went on. Traders were watching the eclipse, so we had a slow market. And then here the markets got strong as that talk of tax reform came in, and this was our one real big boost for the week. But then here there was worries after POTUS's speech about build that wall or I'll shut the government, and also talked about ending NAFTA. Overnight the market sold off. There were a couple of different reasons for down waves in here. There was worries in here about WPP, their earnings coming out, and it looked like Facebook and Google were going to be cutting spending, so that weighed a lot on the NASDAQ, and the NASDAQ did have a little rougher week during the week, not performing as well. So that led to downside in here. Here you could see also on Thursday the NASDAQ rally failed, and you got some good selling right there, and the FANG stocks really started to fall. So there were a couple of big downside waves. But as we talked about last week, the Russell got a little stronger, and that was keeping the market from moving to the downside. As we said, Russell is a buy versus the NASDAQ, and that certainly proved to be correct. And so it was a tight range day in there as everybody was waiting for Draghi and Yellen. And then came Friday, Jackson Hole, and Yellen's speech really did say nothing in here, but she did talk about, she fights against the regulatory change that came out of the crash, which Bernanke and Greenspan created. She was sitting there happy with it happening also, and so she wants to keep all that regulation, of course. In fact, you could call her Janet R. Yellen, R standing for regulation, because she's so much in favor of that. So you see the stock market fell off pretty hard there. It looked pretty panicky. The NASDAQ got a pretty good drop, but then it bounced back in there. So you got some, you can see during the week, the early part of the week on Tuesday gave it the boost, but then there was not much more going on after that. So that was a picture of the week. For the week, the stock market, we'll call it small up. We had the Russell, the best, up over 1%. Dow Jones Industrial Average, S&P 500, and the NASDAQ here at midday on Friday, all fractionally higher. Bond market gained about a point. There is some movement into bonds in here, like investors are scared about something. In other words, we haven't had much of a decline off of the high in the stock market, but bonds have a bid, and you got to really wonder if people are sneaking into somewhere where they can get some protection because of some trouble that is down the road. I got more to say about that in just a moment. So mostly, a narrow week there, and pretty much narrow week for all the markets. We were looking for some ranges and pretty much stuck in the ranges. Bond market, as I said, strong, and the dollar weak. It moves down and is very close to a breakdown. As a matter of fact, we're projecting the potential for a dollar collapse September or through the fourth quarter. We were hoping it would hold up through mid-September, but man, it sure doesn't look like it wants to, and I'm going to show you more about that in the short-term view. Gold choppy again, slightly to the upside as the dollar was weaker. We thought it would be in a correction and modest, and that certainly is what happened. Silver the same thing, gold up about $7, maybe silver a dime on the week. Oil also choppy, but then moves lower, and we're going to talk about this in the short-term view also. You would think it would be doing better based on the hurricane approaching, Hurricane Harvey towards the Gulf, but it had a really big move after last Friday after we did our show, and I think it was pretty much digesting that. So it backed off about $1.30. The products got much bigger boosts in there as they're concerned about the hurricane. So that's basically what happened in the markets during this week. Now we come very close to into September, October, and of course there is lots to worry about during that time period historically, and there is plenty of news coming. I have a little more to say about that. So I saw on TV this week, lots of congressmen, senators coming out, and there's pretty much a chorus that's going on, and that is there's no way the government's going to shut down. We can't let that happen. There's no way the United States will default on its debt. And of course, we have the president coming out and saying, well, he's going to use leverage on there, and the government will shut down, basically, if he doesn't get his $1.6 billion to build his wall. And there's all kinds of criticism about those statements. If all of the congressmen out there, senators, if you all cared so much about where we are right now in this debt ceiling, where were you months ago when we actually ran past the debt limit? Where were you years ago when you were approving budgets with all of this massive spending? If you care so much about us not defaulting on our debt, why did you create all the debt? I mean, that's really what I have to ask. It's ridiculous. And the FOMC, they make it all possible, of course, is they finance it all through their monetization. Yeah, I'm taking on this massive balance sheet that they have on. Man, I can't even talk. It really fumes me about this stuff. So now, you know, the FOMC, Janet Yellen, they've built up all of this balance sheet, and now we have that to deal with, and now the debt ceiling coming up here at the end of September, and they're going to scare everyone with this. And then again, they're going to raise the debt ceiling, right? Even if they have to shut down the government for a brief period of time, so everybody's going to be scared. And then, of course, there is this massive balance sheet, which Janet Yellen is now hinting about reducing. And, of course, when they built the balance sheet, it was all about stimulating the economy. So why isn't she saying that when she reduces the balance sheet, it's going to be a drain? She won't say anything that will scare anybody in the stock market because she's so slanted when it comes to this. And I think that is doing a major injustice. When they start reducing the balance sheet, it is a drain, and it's going to negatively affect the economy and negatively affect markets. And pretty soon Draghi, and maybe he's going to say it today, we'll see, is going to join in as far as their taper and ending their QE. Japan isn't far behind that either. And I just want to say, you know who is to blame when we get our next crash. So when that next crash comes, you know where to point the finger, right at the central banks. And it may not be all that far off. Coming up is our best and worst stocks for the week. Hi, I'm Steve Miller. I want to take just a few minutes to talk to you about our new video workshop, the 5 Essential Building Blocks to Successful Trading. Well, it isn't exactly new, as I've given it a lot of times live, but I wanted to make it easier for people to benefit from our work and put it into a video series. This is not like any workshop that you've ever seen before. We don't, advertise that we're going to give you the winning system, that system that gives you the 1,000 or 2,000 or 3,000% return on the trade. This is much more different. It's about you, or really it's about me, because what I give in here is an expose of my 42-year history, talk a lot about the lessons I learned and, well, the pain or the challenges I suffered along the way to learn the lessons, so that you don't really have to do that. You can learn from what I experienced. This talks about the forces that are within me that really brought volatility in my history as a trader, and that may actually be doing the same thing for you, or many other things that may be challenges for you in trading. So in the intro, I give you all that history about me, and then I tell you what's coming in the next 5 videos, which I'm going to do right now briefly, give you a little bit of idea. Here is the 5 essential building blocks to successful trading. So in building block number 1, we talk about the underlying causes to the success failure cycle. You know, that cycle where you're doing really well and all of a sudden you get into a slump. There's often forces within us that bring poor decision making. I share mine, what those negative forces are, and what has, really driven me to, a lot of emotional swings throughout, especially the early part of my career. And I help you find that about you, what brings these repeated behaviors that bring challenges to you in trading. Building blocks number 2 is about the reactions that we have, those emotional reactions. They're often really strong. That goes really hand in hand with what we talk about in building block number 1. That stress, the disappointment, that negative self-talk, the feelings of fear or shame or anger when things start to go wrong. So what we talk about and what we do in here is give some really good processing about how to build emotional fitness. That's really what number 2 is. Number 3 is, matching style, method, and personality. And what that means is that, we often struggle with style and knowing what, the right vehicle is for us to trade. And then, when we try to figure out what's right, we're not exactly sure how to match up those analytical tools. Also, there's sometimes mismatches in our personality and our experience in the market and our account size and our risk parameters that we designed for ourselves. So this is all about getting balance. And once you find that balance, actually that really helps with what we talk about in the previous building blocks, about the things that trigger those emotional reactions that could really get us into some trouble. Building block number 4 is about discipline. We look at 6 areas of discipline. It's not only about taking losses properly. So what we look for is getting in the right mind frame to be really focused. That helps us really stay on a plan that we build. And when we do that, we really can build greater knowledge. So the more discipline we have in all areas of our life, and that's what we really talk about, is discipline in life and in trading in this section, that really helps us to be a much better trader, much calmer, much more balanced in our life. Building block number 5 is about designing that plan, that unique plan, the basic design, understanding the win-loss ratio that we need to have to be successful, and about, reasonable expectations of returns, and how having, unreasonable expectations can really throw off our level of success. And it's about how to create that winning formula, the unique one for you. So, all of this really has got an overlay to it. It's all about keeping ourselves totally balanced and really helping us with how our emotions might get in the way of that. So that's really the overlay. It's about this being in balance and everything about our approach to trading, everything that we learn about trading, the way we engage in the markets based on who we are, and about how we can keep ourselves from getting set off by the emotional triggers. Really about being the best trader that you can be. All the things that we're going to cover in here, you might hire a coach or go into some programs and spend thousands and thousands of dollars for the type of things that we're going to talk to you about in this. This is nothing like that. I mean, a couple $100 is an unbelievable amount of money to pay for the incredible amount of knowledge that we're going to share. Every one of these videos has got a worksheet that comes with it. You'll be able to do some homework around integrating the things that we're talking about. There is really an unbelievable amount of information in here to really help you get balanced. I mean, we really wanted to keep it very affordable. And I share with you the experience that I've had in 42 years. As I said earlier, this is about you being the best trader that you can be through the lessons that I've learned in trading in the markets and through integrating many other aspects of the lessons that I've had in all this period of time. I think you'll find it amazing, especially for this incredibly low price. Go to the askSlim website, go up to workshops, click on the 5 essential building blocks to successful trading, and you will see there more of this information, and you'll be able to sign up right there for this reasonable price. I really hope that you take the time to take this great 6-video series. Thanks very much for listening. All right, here we are at the best and worst stocks for the week. Going to look at not a lot there. By the way, if you like what we bring to you each week, you're watching this on YouTube, make sure you give us a thumbs up. If you give us a thumbs down, tell us why. And you can follow us on Twitter also at askSlim. All right, so best for the week, the stocks that we're going to look at were mostly in retail. As I said, a lot of stocks that were beaten up got a bounce, and teen retail stocks are in that category as well. They were already figured to do horribly, and well, they didn't quite do as horribly as anybody thought that they would. So it's like ANF had a smaller loss than estimates, so it got a big pop. People short in there. The stock had moved down from $32 all the way down to under $9, so of course it's going to get a bounce. Here is that weekly chart in there, and of course this has our cycle analysis, which is just a very unique type of analysis. We look at the money flows in the market based on the repeating rhythms, and if you look at the bottom, you will always see those semicircles down there. Those are called cycle brackets. That's a drawing tool that helps us to understand the repeating rhythms in the market, cycles measured from low to low. So each of those you see are a cycle, and you could see how each of these timing spikes that we have in there point to the significant low, and how the distances are essentially very, very close in all of those lows. That made a low do right over here. You see that? Isn't that incredible? I mean, just this stuff is just unbelievable. That cycle trough came right at the perfect timing and then got a bounce right into the intermediate resistance area. This is an area where you could, expect that it would struggle, and it got that big bounce. Let's just take a little closer look in here, and you see that intermediate resistance, but it did get through that downtrend right over there, you could see. So it brought buying in, and it's possible the stock makes it to 13 or a little bit better than that, but overall this is not that great looking of a stock, and just gets a bounce as expected. AEO, American Eagle Outfitter, something similar goes on in there. Look at that timing. You see where the cycle low was due, and you can see, I can trace out these cycles for you, and you could see how they follow the patterns perfectly. As a matter of fact, we have the cycles as they actually occurred with these cycle lines, where essentially you put in the top of channels when you see that. So you see that there was a channel right in here, and then channels right in here. It accelerated down, and then this channel right in here, and completed the cycle there, and then moved up. So it's moved up into this major 23% resistance. Yeah, the stock could make it up to 13.5, 14, and here it wouldn't be that ridiculous. Maybe it's this 34-week moving average that causes it problems. First week up is rarely a high. As a matter of fact, even in the most bearish cases, the third week high was occurred right over here. This was basically a third or fourth or fifth week high right there, and those were bearish patterns. But this is not a bearish pattern. What makes it not a bearish pattern? Can you see it already achieved a high higher than this previous cycle? That raises the odds that this was a base. that is getting ready to form or forming in here. So that could last all the way out into November, where it just bounces around. But overall, this says probably the worst has been seen in the stock, and there will be buying opportunities in there. Urban Outfitters, the previous week they moved up on good earnings, and they're up 7% on the week. So Teen Outfitters, they did pretty good, as you can see in there. Also in the retail category, a couple more stocks we'll look at. DLTR, Dollar Tree, and again in here, nice cyclic action that we see, and we do this cycle work on some 300 plus stocks, and we have our main focus group of the stocks that are the best trading, best optionable stocks, and we do all of our rankings and setups on those. That's the best 56 stocks. So most of our work is done on about 80 symbols with futures, but we do look at over 300 stocks. And here you could see Dollar Tree gets a pretty big move. Now it's moving up towards that cycle peak resistance. So again, that is a bullish sign for the longer term, though we would guess that it's going to get some problems right over there between 83.5 and 87, let's say, at those resistance levels, and then probably roll over for some correction. You could see our cycle forecast in there, and showing that we think it's going to have some trouble in that area. If you look at Macy's, we'll see also that the timing is such for a bottom, and you can see the bigger cycles in here, nice harmonics that you see in there. In other words, there's a big cycle and then there's a half cycle, and you can see both of them due to bottom in this nesting right over here. And then you have this engulfing pattern. When you get the engulfing pattern around the low, it says that's likely an important low. So we could see Macy's making it up to about 23.5 in this move pretty soon. This resistance is 2170. This one is around 2340. So those would be reasonable targets up in here, as we believe that the stock has made an important bottom. So you could see that looks pretty good. Also, as I said, the mining stocks got a good upside move. Alcoa, a big move for Alcoa is this week at 9%, as this mining group looks explosive, and the gold market could be just moments away. I admit I did some additional buying in that category in the last couple days, and only because I think there's a possibility the dollar has a major breakdown. I'll show you that in a couple moments, and that gold is very close to, I think, accelerating on the upside. So I'm going to show you that also. And here is Alcoa. You could see it's in this green zone, moving to the upside, and you see this right over here. That's the DBB. That is the base metals. I actually want to show you that so you can see that both Alcoa and the DBB are in these rising phase right over here, and that is driving these stocks. When you look at FCX, you can see that also, and we think that there are higher potential moves coming in here. You can see it stop right at the 78.6%. We have it drawn as that being resistance. There's no reason it can't move through there now in these next several weeks and get all the way up here close to 17 if it wanted to. I mean, this is a copper and gold stock. This is the copper pattern right in here, which has been driving up very significantly. Look at DBB, which is the base metals in here, and you can see in here it explodes to the upside. As a matter of fact, you can see in here the cyclic harmonics. I'll show you these two big cycles right in here, and how there was a very important low. In other words, this big cycle made the correction. You could see this powerhouse of a big cycle in here, and now moving up again only in that first little cycle. When you look at the first one here, it corrected. The next big up move in here, you can see that even in this bearish one, you got two moves right there, 1 and 2. This is just the first one, so you get some correction, then it explodes up again. What does that tell you about the mining stocks? I mean, that really looks good. So while this is the best of the week, of course, what I want to show you is what makes them the best of the week, and they're being driven up by these base metals, and I think there potentially is a lot more of that to come, and maybe that's going to be led on the upside by gold. gold. That's the best stocks of the week. I'm going to show you the worst. All right, for the worst stocks of the week, we're going to switch over here and look at GameStop, GME, of course, again, dipping into the retail category. This cyclic pattern in here is suggestive of a bottom coming, and like this might be a sellout moment. The game consoles sales have slowed down. They're waiting to see how when the new iPhones come out, about how that benefits them on game sales. Here is GameStop right over here. Now, when you look at the cyclic pattern in here, you can see that if you look at the last half of each of these cycles right in here, right, the last half. Well, this one actually went 3/4. This was less than a half. And you can see the last half, big downside risk, all of them, right? And this same thing right in here. In fact, it's a little bit late there on the cycle, which often happens at a sellout. There's a ton of selling going on in here as it's down 13% on the day and down about 9% on the week because it tried to rally before today. And this to me feels like a washout in the stock. We're going to look for a potential bottom forming in here. Now, high volume downside gaps are high volume, any gap is usually the beginning of something or the end of something. When you get a high volume downside gap, normally you get some bottom. Now, you had the same thing occur right over here, and that was the end of one of those weekly cycles, and you could see that high volume gap brought you a rally. I would not be surprised to see this stock get a bounce in here. So while it's in the worst of the week and getting sold very hard, I would say that it is buyable in there. So that's the daily chart in there. I don't have any cycle rhythms, but when you look at it in here as the side-by-side with the weekly, basically that's that big sellout right over there. When I come to this bottom over here, that's that big high volume day. You see that cursor coming by it over there? So I think in GameStop right now it's a sellout, and that somewhere in that 18, 19 area, it's worthy of a swing trade, a few weeks potential on the upside in there. Also on the downside, an unusual situation with gold so strong, but AU, which is Anglo Gold, had a bad week in here. Let me get that chart up for you to see. And this is another example of what I think is a sellout going on in here. So you can see the cyclic rhythms in here. If you, let me just get this last big bottom in here. So you can see that when you have these super bullish cycles like this one right in here, you get almost no correction. You get another big upside rally, right? This cycle in here kind of neutral. You can see that. By the way, that's gold right over there, and gold is driving to the upside, but this is the only one that's driving to the downside. But its cycle is ending right in here. Their earnings were they missed as their costs have been going up, but this one is bottoming right in here. And I wouldn't be surprised if you buy this stock around $9, if you get a reasonable bounce up here to about 11. Let's say this 34-week moving average, you could see this cycle crossed the 34. This cycle crossed, did not. You see that? It got up close to it. So you'd think you'd get up something like this in this cycle. I think it's worth 1.5 or 2 points. Nothing wrong with 15% move. So I think this is another one in the worst of the week that is getting washed out. Now, Domino's is one of the stocks that was on my list for the worst of the week, for the worst of the year. So let's take a look here as we look at this group. My point was at the end of the year that there was likely going to be some problem with their huge valuations in here relative to the rest of the group. These are a little bit dated in here, but you can see in here that this is where the PEs were for, you know, when it was up near its highs, 42, 33, and you could see the rest of the group was much lower than that. Now I want you to note the cyclic action. Now look at 1, 2, 3, 4, 4 positive cycles in a row, 5 with this big rally. Now note this correction right in here and how hard that sell was. Then you get into the next rally period right here. Look what happened. A total failure, a breakdown under that cycle low. It points to a low out here in November. I think the stock's going to 160. I think it's going to be down for the year. What do you think about that? And maybe my call won't have been all that horrible, being the stock moved up from 160 to 221, and maybe it'll be a bad investment for the year. Well, so far, it's unless you sold that out near the highs, it's not a great one. And this looks like a potential huge move to the downside coming in here in dominoes. So a ton of risk, down 5% on the week. Analysts have downgraded this stock right now, and I think there's more of that coming. Last stock we're going to look at here in the worst of the week is Ativa. This one just absolutely coming apart as the analysts are now all over this one. It's down 5% on the week. I've had people writing me about this stock. When is it going to bottom? Well, based on the cyclic action in here, it looks like the bottom comes in late October. So I think it's way too soon to buy this stock. You can look here at the daily. Look at this huge breakdown. Here's where the momentum went negative. I mean, that was not a great signal after that break. But then look what happened as it fell after that from 25 to 15. Well, maybe it was a great signal. And there you can see Tiva looks like it's in a lot of trouble. So that is the worst of the week. And right now what I bring you is my short-term view for the coming week. All right, so this is our short-term view for the coming week. I do this every week. Don't forget, we can only bring you all of this information if you continue to support us. So if you're a member, you might want to upgrade. If you're not a member, please do become a member. A level 2 membership is essentially only $33 a month, and you get more than 250 videos. It's amazing how much you're going to learn. Go to our membership option right on the top of the front page, and you will see all of what we have in memberships. And of course, you can get all of our charts right on your TOS platform. So please do support us and go look at that. All right, for the upcoming week, we're going to look at our short-term view for the coming week. Let me get all of my notes set up here for you, and let's take a look. Now, what I look at what we used to do on this particular show was only bring you the stock market. Now we're bringing you 5 major markets and looking at them in much more depth as we look at the momentum, our momentum indicators on the market, which really are of great value, and we look into more depth within each of the sectors. So I hope that you find a ton of value in what we're bringing right now. We're going to look at the at light crude. We're going to look at the dollar, the euro. We're going to look at gold, silver, and the bond market, and of course the stock market. We always like to be accountable to what we said in the last week. We think that any analyst that is not accountable is suspect for sure, and so we really do try to rate ourselves, and we rate ourselves based on our cycle analysis, how close the formations were, the levels that we look at, and also whether we think that the market is going to be up or down or range bound. So there's a lot of ways that we rate ourselves. The only one we really missed this week was the stock market, which we thought was going to have another leg to the downside. Now I'll show you I still think that's coming. However, it did not happen this week, and the rest of the markets we were pretty close on, and it was easy because we thought that the moves were going to be small. We knew Jackson Hole was coming, and we thought that there would be some support and resistance areas holding things, and that's really what we did get. So we're going to look at the short-term view for the markets on our daily charts, looking at all of our cycles in here, and here is light crude. So what we're looking at in here is a big cycle. That's this one right in here. So you get the big rally and the sell-off. That's this cycle bracket right here. And then it made a bottom and moving up. Now, with the hurricane coming and with the products moving up pretty strongly, and I'm going to show you those in a second, oil's not doing very well. You see this cycle low support here? If that breaks 46.60, that will be very bad. Now, it's dancing around these minor supports. Now, we said last week it would likely be a small up week. It would test resistance around 49.10. Now, it got up right up near that up here, just under 49 right there, but after the show, we got done doing the show last week, it spurted on the upside, so that kind of messed up our call a little bit, and we thought it was going to get up there and test it, but basically be in this range, and you could see that. So what we expected was kind of failing in here, rolling over. That's based on this cycle, and then taking off again. If it can hold here in the next couple days and then move to the upside, it's going to be okay. And I think that's probably the case. We're going to call it range bound, 47 right over here, and 48.65 right over here, minor resistance. That's kind of a narrow range that we're calling in there with, I think, you know, a tough making any upside ground at the moment. One of the reasons is that when you look at heating oil, which is responding, and gasoline to this, and you see this is a better pattern in heating oil, as that's moving up compared to what oil did. And when you look at gasoline, which we had a long side setup in and pulled it because we were a little nervous about the poor action, but you could see it gets up here based on this hurricane news and then gives it up. This shows a lot of weakness and looks like it's going to pull back for several more days. So we're just going to say that this looks like the energy market is going to struggle. You would think that natural gas would be doing better also in here, and you can see that it really is stuck, and there's that short-term buy zone in here that we have. But if it gets underneath that zone, it's going to be a little worrisome, and you could see we're projecting it to kind of be range bound and correct over here for the next couple of weeks. So that's actually a look at all four of them. And oops, I just want to stay on the daily. The reason I showed you that all of that was because I think it's really important to say that, you know, with Hurricane Harvey heading towards the Gulf Coast and a lot of worry, why isn't there any more upside move in here in light crude? That does get me a bit concerned. When you look here at the momentum in here, there's really not all that much to speak of. In other words, momentum in the light crude market is neutral. That is our askSlim momentum indicator on comes off of our slim ribbons. No real signal in there when I look at that. So that's a look at the energy market, and based on what I'm seeing, it's not great action. So we're going to look for light crude to be range bound. Next thing we're going to look at is the dollar. Now, I've been giving a lot of cautionary signals out there as when I say that I think the dollar is in a lot of trouble. We have in here what I consider to be very perfect harmonic action, and have a workshop coming up that will explain a lot more about this. But each of these we call a harmonic family right in here, and you could see the rally and the sell-off, the rally and the sell-off. That makes up these two cycles within the bigger one, and here you could see the rally and the sell-off. Now, if you break underneath that support right there, and look at how close that you are as it came down in here, this is going to be extremely bad news because it's going to break down the intermediate pattern also. And there's a potential that my hope that we would rally up into mid-September is not going to be able to happen. So that is a very key area. Now you can see I have two projections in here. One of them is the red one. It's much more bearish if you get the breakdown, because you'd get a dip, you'd get the rally, it wouldn't last long, and then you'd break down and sell off again well into the fourth quarter. So this is a very bad, worrisome pattern that we're seeing in here, and I would say that says something bad for gold. Good for gold, sorry. Bad for the dollar, good for gold. Take a look here. You could see momentum in here. It's quite oversold based on the projection oscillator, but the momentum is negative. And when you see the... Now, this is... I'm going to do a workshop on here, I swear. And this is the best pair you could use for momentum, where you see it's negative and you get overbought, and negative and you get overbought, and negative and you get overbought. It just keeps going down. That shows you how weak the dollar is. It's just horrible. When I switch over to the euro currency, which is the inverse, you can see in here that it gives you just the opposite. It's overbought right now, but it got oversold and it couldn't even break, stayed positive. So the euro is super positive. Here you could see in here, I expected it to be in that range right over there, and it stayed in the range, and we thought it would be range bound this week, and it was until it picked up its head late in the day. And Draghi's going to speak, and if he says anything at all that is the slightest bit hawkish for their monetary policy, you're going to see the dollar collapse and the euro explode. So that's yet to come in here. And this is a really good picture of a very strong euro currency. So there is a ton of risk in there for the dollar and strength in the euro. And of course that converts over to strength for the gold market. Last week we thought that there would be a very minor correction in gold and silver, but the risk was to the upside. We're very clear about that. And I just want to show you these just amazing patterns with this huge strength in here. Now there's a lot going on in here, and that is all of these cycles are, this is right over here, the silver and gold on the revised cycle that we put in there. This right over here is the GDX. So GDX miners are rallying. When you look at here, you have the miner cycle in gold, and that is not rolling over and pushing down at all in here yet. We thought it would be a narrow corrective week. This was our buy zone that we had in there, and you could see it dip down in there, but then started to move up again. Man, there is risk in here. We see a few more days potential in here, maybe a week of chop, but there is, at any moment you could see it break up through this area. So it could break out to the upside, correct a little, and then break again big to the upside, or just chop around for some more days and then move to the upside. We don't see much downside in here. This is just super strong, really bullish. Look at the momentum in here. It tried to get a little oversold and can't. Positive momentum in here, just super powerful. When you look there at the gold market, if you look at the silver market here, you could see also that it is in positive momentum. It doesn't look quite as powerful as gold, but that is showing you a lot of strength. Look at this silver pattern. So you see these perfect silver harmonics in here, where you have these small cycles right here, and it makes the big cycle. So you're right over here. In other words, this one correcting, but you're getting no downside. What you're doing is just doing this little triangular shape or little wedge shape in here. So what that says to me, some little sideways movement in here and then exploding to the upside. So we have some pretty good upside targets. We think it's going to be an up week, sideways to up week, and the question is it up a little bit or is it up huge? So we're really liking what we see here, and especially when we see this dollar action of being so incredibly weak, that adds a lot of fuel to this sense for the copper, for this gold and silver market. And copper in here, you could see I'm jumping ahead of myself, has been just super strong. Look at those cycles. I mean, is that perfect cyclicality? It's just unbelievable. And you could see that once we got the positive momentum upward turn, this is your cyclic base formed right in here. There's your positive momentum, and you could see it moves up the slim ribbon. Each of those, you see the buy zone right there where at the minor support at the bottom of this cycle pops up again. Super strong in there. I mean, it tried to give it up, moved up, and then could not give it up. So, man, is that ever strong. Look at this powerhouse in here. It's overbought. You'd think it's going to give up some ground in there. And you can see our projection is for a little higher and roll over. These are key areas, these fib extensions, and it's just moving up through it. I'm going to have to put in higher fib extensions in here as the new ones have been developed. So we got overbought over here. It couldn't even really tick down. It would just move sideways. So super powerful there. You could see in copper, and these metals are looking like absolute dynamite. Take a look at the bond market now, /ZN. We're going to look at the 10-year first. And these are massively bullish charts in here. When they move up, when they should be correcting, and all you get is sideways action. We said last week that the 10-year was likely to be in a range for the week. Now, the bottom of our range was at around 126.08. So this right over here was 126.15. The top of our range was at 127.08. So this up here is 126.31. So it was a narrower range that we expected. What's key to look at in here, now we expected it range bound. Why did we expect range bound? Because we saw upside power and these corrective periods coming in. This looks to us like there's 2-3 days of this sideways choppy action at the most, and then moving upside again. That really doesn't speak good for the stock market when you look at that. There's some movement coming in here that is to the upside. We're looking for in the next 1 to 2 weeks an upside pop in here that takes you up to 127.28. That's our target in here based on intermediate levels, and that's I can't even get to it right up over here. So it's way high, 127.28 up here on the intermediate chart. And when I look at the bond market here, the ZBs in the 30-year, you can see in here that same incredible action. Now I'll just trace out these cycles for you. So it's this blue one right over here that is creating this cycle right over here, and you can see it's following it perfectly. Right in here, right in here. Where is the correction? There's that little short-term support that's rising. Maybe you get a couple days, but then another upside explosion. We're looking for the upside in here in the bond market to hit about 158 or higher. It's now trading at 156.18 and showing a lot of strength on the day. So that is a good look at some really strong market in here in the bond market. So we have this movement, this flight into the bonds, it appears, and this super strong gold market. What does that all add up to? There's money moving into places that would be other than the stock market. So we're still suspicious that there is that kind of a washout down leg in this correction coming in the stock market in the next week. We've had a tone change basically because there is selling coming in during the day, which we haven't seen a lot of in recent months, especially in the NASDAQ, which has these momentary free falls, and then the buying comes in. Like I said, the market got saved a little bit by the bounce in the Russell, and we said last week Russell was going to be stronger than the NASDAQ, and we like that trade, buy Russell, short NASDAQ, and that worked out nicely. So The Russell's stronger, and now we're at a time period right in here where there is risk again. Now, we had a slight little shift in here in the cyclic patterns that we believe is important. So we've changed a little bit, and you will note that. So for our subscribers, we'll soon be giving you a little update. We had an alternate pattern, which you have on your charts, and that alternate pattern is the one we've adopted right now because it has the highest probability. That's what we do. We keep looking at the new data every single day and then do the best we can with what we have for our projections. So this, you could see the projections in here point to, and now the revision in here lines up with the NASDAQ projection we had before and the Russell. So this looks like 6 to 9 days in here where this period of extreme risk extends out to. That's this right in here. We believe this to be kind of a bear flag that's forming in here. It gets up into the minor resistance area. If it got above this 61.8%, we would then put that analysis in suspicion over 2463 or over this high over here, which would be around the 78.6, 2475. If it got up there and failed, well, fine. If it doesn't get up there, then it's following the pattern what we believe, and we believe that there's a lot of risk in here. We're still projecting 2406 to 2387 into these support areas right over here, and we think that there is high risk of a downside week coming up that's going to align with this bond market period that we think is going to spike to the upside, and the potential for this gold move also. So we're looking for downside again, 2406, 2387. Those are the numbers that we're looking at in there. When you look here at the momentum in the S&P 500, this is very bearish. Now, what is bearish about it? Momentum broke down in here. You see that? That was the first time since April. Then you got the projection oscillator overbought, and you're still negative momentum. There's a very high probability that it is going to move to the downside again. So that's one of the reasons that we believe it's going to move to the downside. Well, I'm just going to stay in the momentum and let you see the NASDAQ momentum, and you've got the same thing. It got overbought and negative momentum. Take a look at the Russell momentum in here. You could see overbought just getting up to that midpoint, 13-day moving average. So that is a very bad sign. Also, all of those in the momentum point to the fact that we're going to get a downside move. Here, when you look at the Russell, you could see the alignment of these cycles, 6 to 9 days potentially. This was our sell zone in here, and you could see it's coming up and touching it right there. When you look at the NASDAQ and the X, it's the same thing. You could see projecting out here to the bottom of this cyclic period, and we're projecting 57.35 in the NASDAQ on the downside. That's about 100 points, and to me that's a conservative call on the downside here in this next 6 to 9 days. The 56.65 level would then be the next level after that on the downside. So that is some pretty bad action when we see that in there, and it looks to us like this areas of resistance is where it's going to stall, and then the sellers are likely to come back in the market. We think there's a lot of risk in this next 6 to 9 days. You have our targets and projections in there, and I hope they pan out for you. Don't forget, follow us on YouTube, follow us on Twitter, put comments on here because we'd love to hear your comments, and also support us and become a member at askSlim. That's it for this show. Hope you loved it, and I want you to be careful because it is so crazy out there. And we're always wishing you great trading.